Gold is reasserting its place in the monetary system again. It always has been money, but for a while it was suppressed and was kind of left out of the financial system. But I think now the financial monetary system is realizing the value of gold as an asset that cannot be printed. The volume in the junior mining stocks, which again are more retail-centric stocks, started to pick up. The stocks weren't moving up in price yet, but the volume was starting to pick up. And over the last, let's say, 6 to 8 weeks, you've now seen the price action in the junior mining stocks start to do much better. Silver price is doing obviously much, much better. And that to me is an excellent proxy for increasing retail appetite. And that's really what you need for this rally to go mainstream.
Today we're going to chat with Michael Gentile, of course, co-founder of Bastion Asset Management, as well as strategic investor in the junior mining space. Michael, it's great to have you on the channel again.
Next time, good to see you again.
Awesome. Would love to really dive into what you are doing to leverage this gold bull market that we're in right now. But before that, let's quickly talk about the gold bull market that we're in. Gold's flirting with $3,700 an ounce on the futures as we speak. Zooming out a bit, where are we in your longer term thesis for gold?
Yeah, I mean, I've been, as you know, very, very bullish since gold was around $1,300 US. The last several years, we've been seeing, very strong and pronounced buying from the central banks. And that's really what's been driving the physical gold price, the desire of the other central banks and the global economy to diversify away from the US dollar. We've seen pretty much relentless selling of treasuries by a lot of foreign central banks and buying of gold. I think last week or last month, the value of the gold holdings crossed the value of treasuries held by foreign banks for the first time in a long, long time. So that's been a mega trend, Stein. I think that's something that's continuing. I think what we've seen recently is throughout the whole rally, from before 2019 through today, we've seen central banks accumulating gold, but we have not seen any participation from the mainline investment funds. And all the rallies in the past have always been driven mainly by investment funds because central banks were not buying in the past. So central banks is sticky, long-term, the exact kind of buying you want to see in a bull market. But there was very little participation from the traditional investment funds and mainstream retail. We've talked a bit about that in the past. We're starting to see the first signs of that coming. So that's, I think, been adding a bit of fuel to the fire that we've finally seen participation. If you look at GDXJ or GDX or even the gold ETF holdings, they're still well below their all-time highs in terms of ounces held. And so that was a sign to me that the market was not broad yet. It was not fully embracing the precious metals as a theme. We're starting to see the early signs of that other pool of capital start to come back to the market, which is driving that demand. And we could talk about geopolitically, whatever is happening, how long that trend continues. But I do believe it's a mega trend longer term, that central banks will continue to diversify away from the US dollar. But the participation of the investment funds and general public is a new emerging trend. I think it's also helping fuel this last stage of the rally here recently.
Actually, very interesting that you brought up that foreign central bank holding. I mean, this chart has been going like wildfire across the socials recently. Taffy Costa released this chart representing that gold holdings as a percentage of foreign reserves compared to the US Treasury, like you outlined, and we're crossing that point. Currently, we seem to be around 20 to 25% holdings of gold. However, historically, we saw way higher. So this might outline that we are not done with the gold buying from the central banks. Is that right?
Correct. And I mean, Tabby does amazing work. And both Tabby and I have been talking since 2018, 2019, when it was around sub 10%, right? And how that should change if you have a view that the deficits and the debt and the value of paper money is declining by the day. So I think you're going to see that, and I think what you're also going to see, Stein, is a more permanent allocation to gold. Like gold is reasserting its place in the monetary system again. It always has been money, but for a while it was suppressed and was kind of left out of the financial system. But I think now the financial monetary system is realizing the value of gold as an asset that cannot be printed, that cannot be monetized, and therefore is a very secure asset, especially in a period where governments are acting very responsibly and printing money and lots of debts and inflationary spikes that we're seeing and probably will continue to see in the future. So yeah, I think it's definitely a mega trend, like I said. And you looked at it historically, 65 to 70% of the central bank's balance sheets. That was, when we had a gold standard. I think to a certain degree, the BRICS and other countries are sort of, without actually saying it or having a formal accord, are bringing back a gold standard and trying to back more and more of their currency reserves with something that is tangible and unprintable. So yeah, I think this is a mega trend, and this is something that I think will continue in the future. And what I love about central bank buying, Stein, is they're not traders. They don't buy gold at $2,800 to say, oh, it's $3,700 today, I should take some profits. This is a permanent asset allocation or a long-term 20-year decision by central banks to accumulate gold and have a certain percentage of their currency reserves in gold. So they're pretty sticky and insensitive to price. Obviously, the higher the price goes on a percentage basis, it increases the value on their balance sheets. but they're not going to be trading around it like funds or hedge funds would do. And so that's really the best kind of buying you can have in a stock or in a commodity is sticky, long-term, asset allocation type buyers, not traders.
100% price agnostic buyers are great to have behind your commodity. Talking about the longer term cycle, of course, this buying could then continue for years or decades to come, very steady buying. On top of that, we might be looking at retail going back into gold. Up until now, we have seen outflows out of the popular ETF. You started hinting at it. We've recently been seeing some inflows. How are you looking at that part of the cycle? Is that a real afterburner we could be getting for the gold price?
Yeah, I've always said retail. I often get asked about silver. I'm not sure if you're going to ask about that later, but I'll maybe jump ahead of the gun there. But for me, silver is always the proxy for retail interests in the sector. And so how did you know that the main driver of the gold price was central bank buying? Well, for much of the rally, the gold price was doing really, really well, and silver was really not moving. People were saying, what's going on? The gold to silver ratio is out of whack, and shouldn't silver follow gold? But the silver investors are much more retail focused, and the gold investors are the big money central banks and the very, very big money funds, global macro funds that allocate hundreds of billions of dollars of capital. And so up until recently, silver had not participated in the rally. And when I saw silver start to move, that was the first sign to me that retail was slowly coming back to the space. And so silver started to rally. The volume in the junior mining stocks, which again are more retail-centric stocks, started to pick up. The stocks weren't moving up in price yet, but the volume was starting to pick up. And over the last, let's say, 6 to 8 weeks, you've now seen the price action in the junior mining stocks start to do much better. Silver price is doing obviously much, much better. And that to me is an excellent proxy for increasing retail appetite. And that's really what you need for this rally to go mainstream, because central banks are buying gold. Doesn't mean your shares of Newmont or Barrick or my junior mining portfolio is going to do very well. They were not doing well. And so you need broader participation. And I think it's slowly starting to get into the mainstream psyche of how gold is, as I mentioned earlier, a permanent asset allocation decision of the central banks, how the price is not just a quick pop and drop, but something that can be sustainable over years and decades at time. And therefore, investors are feeling more and more comfortable that the gold price is sustainable at these higher levels. I'm not saying $3,700 is here to stay forever, but it's at these higher levels. And therefore, it's more advantageous to allocate capital to the broader equities who will benefit from these higher gold prices and higher margins in the future.
Perfect. Thank you for outlining that, Michael. And of course, if one is bullish on gold, like you already started outlining, you might be looking at producers, developers, and juniors to get some leverage to that. And we'll be talking about your portfolio in the junior and developer space in just a second. First, gold producers. Do you believe there's still value to be had in the really high quality names out there like an Agnico Eagle? Or should one already go down a bit on the quality curve to, for example, an Equinox Gold, that's still a great gold mine to potentially own, but they are having a bit more troubles on the short term and therefore might be showing a bit better value proposition today?
Yeah, I mean, a few things. There's definitely, business has never been better for gold producers. And I gave a little anecdote recently in an interview I did, Stein, as you know, a couple of years ago, gold was $2,000 an ounce US. Today, as you mentioned, it's brushing up against $3,700 US in the futures market. The gold margins today that the average producer is making is approaching $2,000 an ounce. So the margins they're making today is almost as high or higher than the gold price was 3 years ago. So that fact alone tells you that life is very, very good for producers, and therefore these stocks should be making new all-time highs. And if you look at significantly, above old all-time highs, because that margin upside is just fantastic. And so if you look at the big cap producers like the Agnicos and the Newmonts, the GDX is a good proxy for that. That made a new 15-year high, but it's only approaching the levels that we last saw in the last gold rally when the high of gold was 2,000, and today their margins are $2,000 an ounce. So that proxy in real dollars, or how you want to look at it, is still seems very, very low. So we started making new 15-year highs in the large cap producers, but I think there's significant upside ahead beyond for that. Now the mid cap producers that you mentioned, the Equinox Gold, K92 Mining is a name I really, really like. Those kind of producers are still far away from their old highs. The GDXJ, which is a good proxy for those mid-cap producers, hit an all-time high of $160 to $170 a share. I think it's in the mid-80s today, right? So you're still 50% below where the GDXJ made its old all-time highs. And yet those margins, especially in the mid-cap producers, who are typically growing production or have higher cost structures in general, let's say, that should be even more pronounced for their margins and their cash flow and their profitability. And so I do see more value in the mid-cap space, emerging producer space, than I see in the large cap space, but both should do very, very well. And then the last bucket is the junior resource stocks, the resource names, the PEA names, the pre-production names. those names have been dead in the water for the last 6 years. Most stocks were traded the same price 3 months ago as they were trading in 2018, 2019. And so those stocks were really, to me, the biggest values. But because they weren't cash flowing and because retail was not at all participating in this market, the stocks had no positive price action. So those stocks have done very well in the last, let's say, 6 to 8 weeks. But there's a lot of catch up to do in those names relative to the mid caps and large caps. So going down the size spectrum, you will see more value. That's where I'm seeing the most value in the development stage companies or the resource stage companies. But buyer beware, they're more volatile. They don't have cash flow. They're more risky. But the whole group should do well. And you need to know that Newmont, Barrick, and the mid caps like K92 Mining and Equinox are going to continue to do well, because that provides more valuation cover and more upside for the smaller names that have the most torque and most absolute upside in this upturn, in my view.
Perfect. And Michael, do you think this is really a stock picker's market for people that are looking at these producers to try to pick the best ones, or should you just own a market index like the GDXJ or the GDX, and really a rising tide lifts all boats?
Yeah, I mentioned today my investment process. I own 25 to 30 names, and over the long term, my time horizon is 5 to 10 years. We've spoken before about that in the past, right? So over 5 to 10 years, if I have 5 to 6 or 7 stocks that become a mine and do exceptionally well, go up 20, 30, 40 times my money, the rest of the portfolio can go to zero. And mathematically, in junior space, a lot of these stocks will not work, because not everything you discover is going to become a mine. The vast majority of things are not going to become mines. But I made a joke the other day. I was saying, in this market, 25 out of 25 stocks are all going to be up. When the market is rising, a rising tide lifts all boats, all stocks are going to be up. So don't think you're a good stock picker because you 25 of your 25 junior mining stocks are up this year, right? The long term will be the judge. Like Warren Buffett says, over the long term, the short term, the market's a voting machine. The long term, it's a weighing machine. So the weight on the scale over the long term, 5 to 10 years, will be what's the quality of the project? Did it deliver? Did it end up being geologically robust enough to become a mine and create massive amount of value for shareholders or not? But in the short term, when the market is good and the market participation is strong, all those names will be up. So it really depends on how much work you want to do and how dedicated you want to be to the space. If you're a stock picker, I think you can soundly outperform the indices. You can buy GDXJ and be up 60, 70% this year in a very good market, or you can find individual stocks that could be up 3, 4, 500, or 700%. But that takes a lot of work, and it has to have a disciplined approach to allocating your capital and the time it takes to do that. So for the average investor, I would say GDXJ is a very good proxy. You're going to get excellent exposure to a bunch of quality companies without the headaches of allocating capital. But for your viewers who love the space, who are spending 10, 20, 30 hours a week with their own time investing effort in looking at stocks, you can build a nice portfolio on your own that probably could outperform the sector if you have the right approach. But that does take a lot of effort and a lot of discipline, in my view.
Perfect. Thanks for outlining that distinction there. And of course, coattailing is a very popular way to potentially go about stock picking. We're going to be talking about that for a second, developers and explorers that you're actually participating in. But first, your European Roadshow that's coming up. Perhaps you can outline when, where, and how people can potentially participate in this.
Yeah, I'm really excited about this. I mean, obviously, I do a lot of these interviews because I like to share my process and hopefully help educate investors on how I allocate capital and what's a healthy approach to take towards junior resource investing. So the idea behind this roadshow was 5 cities in 5 days. It's October 6th to October 10th. We're going to be stopping in London, Paris, Geneva, Zurich, and Frankfurt in that order. I'm going to be speaking about how I allocate capital in the junior resource market, my investment approach, what I look for as a template in junior mining investments. And I used to be a teacher in university for 10 years, part-time at night. And often the best examples, other than just showing people a theory, is tangible examples behind that. So I decided to bring 6 of my largest investments, dollar value investments, with me on the road. I'm going to bring Northern Superior, NorthIsle Copper and Gold, Radisson Mining, Capitan Silver, Group 11 Resources, and Astra Exploration. There's 6 of my 25 companies. I love them all. I wish I could bring all 25 of me. So it's not to say that they're the only ones that are worth investing in, but they're good examples of successful investments that I've made that still have significant upside, that fit the framework of what I look for. So I'm going to give a little 20-minute tutorial on what I look for in junior mining resource stocks, and then each company will have 15, 20 minutes to present their story. And hopefully investors in the room can make the connection between what I look for and what they're seeing in front of their face in terms of quality exploration companies. So that's the idea. It's going to be a lunch format, kind of from 12 to 2:30, with some one-on-ones in the morning for investors that want to have a deeper dive into those 6 companies. They'll get a chance to meet me in more detail, and we'll move that on to each city along the roadshow. So we're quite excited about that. think it's a great time to be introducing these companies to more investors, and looking forward to meeting European investors like yourself that have never had not a chance to meet physically and face-to-face before.
Awesome. Thanks for outlining that. And I would love to dive deeper into those examples that you're outlining here to really get a picture of the rationale behind why you're interested in these companies. Let's start with Astra Exploration. I believe you own about 18% of the shares of the company, which is, of course, a large position. So you must like that company. Can you outline really what your long-term vision for this company is and why did you buy this stake in this company?
Yeah, so when I make an investment, I'm looking to own between 5 and 20% of the company initially. And I think what I do that's different than other investors, Stein, is I'm willing to get in quite early when the market cap is very low and when a lot of the answers are yet to be answered. So there's the potential. So what I call is I look for the early potential signs of a potential mine, right? So there's, when the market is clear that it's a mine, and you've kind of answered all the questions definitively, in this market you'll have $1 billion, $2 billion, $3 billion market cap. But there's a lot of answers you've got to answer along the way, both geological, technical, infrastructure, along the way to get to that point. So because I've invested in producers for over 25 years, I tried to reverse engineer what traits that producers have, successful mines that have already been built have, and reimpose that on a $20 million, $30 million market cap junior. And so there's a few things that I look for, and they're obviously vary by project, but grade is very important. So what's the grade is your margin in general, right? So you have to have good grade. You have to have, in general, good infrastructure, because if you don't have good infrastructure, you got to build it all yourself. You've got to have a lot more ounces in the ground and grade to pay for that infrastructure. So obviously scale. So the combination of grade and scale is your margin and the size of the cash flows you can produce in the project, coupled with infrastructure, gives you a really good trifecta of economic value. Social license, obviously jurisdiction. Is it a place where you can build a mine? Have there been 10 mines built in this area, or is it the first time ever that they've introduced mining to the community? That could be a bit of a social license issue. And then something that's very, very important to me, you'll see across all my companies, Stein, is management ownership. Because there's a lot of bad actors in this space, a lot of management teams that don't create value for shareholders, but try to create value just for themselves. If they own significant equity in the company, I'm talking 10, 15, 20%, 30% ownership by the board, strategic investors like myself, when something goes wrong or you end up in a bear market where things get very tough to finance and things get difficult, you will roll up your sleeves and act like an owner and do everything you can to preserve value for the shareholders. And Astra is an incredible example of that. So during the downturn, this bear market we had from post-COVID till about a year ago, right? Financing markets were very, very difficult. The company had good projects, but their balance sheet was pretty tight for cash. And so the management team decided to not pay themselves at all for 12 months. The CEO, Vice President Exploration, the whole team, and this is not IOUs or deferred salaries, just did not take any salary for 11 months because they said, the market's a bear market. We want to do some more acquisitions in the sector. And if we burn our cash paying ourselves, we'll have no cash to do smart acquisitions. And so what they did is they spent a whole year not paying themselves, continuing to work for the company because they owned about 15% of the shares were owned by management. They said the dilution we would take from issuing shares here and paying ourselves and burdening the company with our G&A would be much higher than the loss we'll take on our shares, thinking like owners, not managers, right? And so what they did is they took a year and they found this amazing project in Argentina, and they found this super high grade project that they spent 20 years dreaming about acquiring. And because the market was so depressed, they were able to acquire it at a very low price. And about 4 months ago, they came out with about 8,000 grams per ton silver hits and 70 to 100 gram gold hits, showing the project had real legs. And so that's just a small example of the ownership mentality versus the renter mentality of management teams. And obviously there's a lot more I'll talk about on the tour, but that would be kind of the hallmarks of a great project or a great team. Doesn't guarantee geological success, doesn't mean there's going to be a mine there, but it's got the right attributes with the right attitude of management and the right skill set to have success. And if you have those attributes, you're putting the odds on your side. You're increasing your percentage of success. And I still think Astra has got a long way to go. It's got about a $40 million market cap. Has not really participated in this recent rally. They 2-3 months of pause because it's been winter in Argentina. They'll be back drilling in about 3-4 weeks. I think the market's eyes will be back on this story right about the time we get on the road in Europe.
Perfect. Thanks for that overview there. And like you already described, it's all about getting that betting average up. Of course, there's risks associated with you're betting on geology, you're betting on this discovery that's already been made for Astra Exploration to be expanded, see how far it goes. And that you don't know until you actually explore. But you can decrease your risk by finding good management teams.
Correct. With all the right hallmarks. And some projects, Stein, you might have a splashy hit or two, but they have no infrastructure. The scale potential is not there, right? The system is not big enough. So I don't buy stocks for splashy press releases, for assay results that are going to come out next week, next quarter, because my horizon is 5 to 10 years, and because I'm trying to make 20 to 50 times my money. I'm really concentrated on things I think have the potential to go all the way. And even all the stocks that I have in my portfolio that I think have potential to go all the way, only a handful of them are actually going to go all the way to become mine. That's just the reality of investing in junior resource market. We've talked about this venture capital approach in the past, right? 25, 30 companies, but you understand full well at the beginning that only 5 to 6 or 7 will go all the way potentially. If you do a really good job, that's an incredible batting average. Those are the ones that are going to pay for all your returns and allow you to outperform the index by hundreds of percentage points if you're disciplined and you hang on to those winners and you stick with the process. You mentioned coattail investing. Coattail investing, what I don't recommend is listening to me or someone else on an interview saying, I like this stock, and you go put 80% of your money in Astra Exploration, let's say, right? It's good to do your homework, get some advice from professionals that are investing in stocks. But in this market, you absolutely need a relatively diversified portfolio of names that can give you that optionality of hitting a few big home runs.
Perfect. Let's talk about Capitan Silver Corp. I believe you also hold a large stake in that company. Walk us through really what attracted you to this company in the first place, and what are some of the catalysts that you're looking out for?
Yeah, you'll see a similar template here. Strong insider ownership. I think between the top 10 shareholders, 60 to 70% of the shares are owned by management or strategic investors in the sector. The management team, not only are they heavily invested, but they have an incredible experience in Mexico. So the project's in Mexico. It's a high-grade silver project. I think one of the most exciting exploration stories in the silver sector today in the market. But the team, when you're operating in a foreign jurisdiction, I'm Canadian obviously, so when you're investing in a company that's outside of your home territory, to me it's very, very important to have that local presence. So the team at Capitan, led by Alberto Rosco, is the team that built Argonaut's Mexican assets for them, which had $1 billion market cap, about 200,000 ounces a year production. Almost the entire team of Argonaut that built those assets for Argonaut's Canadian company now moved on to Capitan Silver. So they've got a really strong local presence. The CEO is head of the Sonoran Mining Association. So companies like Grupo Mexico and Fresnillo, he's chairman of the board of that mining association, even though he runs a $100 million market cap company. So you can see his presence and his respect that he has locally. So that's very, very important. Back to my earlier points, the grades are fantastic here, Stein. A couple thousand gram per ton silver hits are very, very consistent. It's an intermediary epithermal system, which is similar to Mag Silver, Gato Silver, Fruta del Norte. These are very rare systems, what that means basically for non-geologists, I'm not a geologist either, is it's very high grade, but it's got significant depth potential. These systems can extend for 400 to 500 meters deep. So when you've got both very good grade and legs or vertical continuity to your system, that's how you build significant ounces. So it's got great geology. Similar to Astra, during the downturn, because they're big owners, they tightened up their cap structure, they cut their G&A, they didn't spend any money on drilling for a couple of years, which hurt the stock because there was not a lot of news flow. What they did instead was consolidated the entire district. So they expanded their land package, I think, by maybe 200% or more in the last 2-3 years, doing smart accretive acquisitions instead of drilling. And so now when the market has turned and they've had some fantastic drill results, they control basically the district, 100% ownership of the district. They also bought back all the royalties on the project. So just doing really smart value-added things that you would do when you think like an owner, right? Don't worry about drill results for the market. We own 80% of the company. Let's do what's right for shareholders, build value, pay off the royalties, consolidate the camp. Don't spend money when the market's not there. And now the market's turned. They've raised some more money from strategic investors. They put out some fantastic drill results, and the market is ready to embrace the story. It's still a very tight capital structure, no warrants, less than 120 million shares outstanding. So again, thinking like an owner versus a management team or a renter is a very big differentiating character. If you've got the right project, the right team, the right cap structure, you're set up for success in this market.
Perfect. Thank you for outlining that. And of course, the grades that you were talking about here are really high on the silver, but also some of the gold intercepts, which it will look like it's going to be a byproduct. Those could be economic at some other projects by themselves. So very interesting on the high grade side.
Yeah, what I love about Capitan too, Stein, is that a lot of companies report silver equivalent grades. So you'll see a splashy hit of 1,000 gram per ton silver. And when you go in the details, you'll realize it's 80% zinc, lead, and other, and 20% silver. If you look at the Capitan drill results, they're about 99.8% pure silver. So when they're talking about $2,500 gram per ton silver, it's all silver, shallow, close to surface. That has a huge impact on economics because that's the silver producers, the precious metals companies, they don't want to buy an asset with a 20% silver kicker. They want something that's got 40, 50% silver. In Capitan's case, you're talking high 90s in general across the project. So that's a That's a really compelling factor of this story on top of that great geology, the fact that it's pure silver is very exciting to me.
Yeah, I can definitely imagine that. A lot of gold producers are, like you already outlined, a 30, 40, 50% silver. Sorry, a lot of silver producers are a 30, 40, 50% silver producer with those byproducts. Now we're going to be talking about Group 11 Resources, which does seem to be a zinc and lead mine. You seem to own about 15.3% of that company. Can you outline really what is attracting you to that one?
Yeah, so Group 11, again, trying to find projects that have potentials to be a mine. Again, still very early there, but have had significant success with the exploration. What attracted me originally was it's in a great area of Ireland. They're in an area that already has 50 million tons identified of a zinc resource, which is partially owned by Palace Green, which is owned by Glencore, about 45 million tons at 8% zinc. Group 11 has another deposit called Stone Park with 5 million tons at 10% zinc. So between those two deposits, before I made my initial investment, you already had 50 million tons of zinc in a great camp with great infrastructure and low access costs. So that was, if you're going to make a new discovery, the best place to make one would be adjacent to 50 million tons already that's not yet a mine, because you already have the scale to be significant and have the scale to be a mine. Why it's not built yet is the fact the grades of that deposit are between 8 and 10%, just on the marginal side of economics. So my whole thesis when I looked at Group 11 was, wow, if they could find some high grade, some 15, 20% zinc or some high grade silver or whatever else they could find in the region, that would be the first 5-10 years of any mine plan. Then the rest of the 50 million tons becomes economic because you're unlocking the value of the entire camp. So I'd followed the story since it went public. They hit a discovery hole about 5 years ago. They hit 20% zinc in a new area of the play. And I said, wow, this is what I've been looking for. This is the potential high-grade discovery that we've needed to find to make this camp really work. And Group 11 still today has a very low market cap, about $20 million market cap at the time. So I bought a very significant stake in the company. Similar situation, management ownership, very strong team, great infrastructure. The drill costs where they are $150 a meter Canadian, about 100 euros a meter to drill, one of the lowest drill costs I have in my portfolio. You've got the scale already in the camp, and now the grade, which is always the missing piece, was starting to light up on the screen. After making that discovery, it took a couple of rounds of exploration drilling to really flesh out where that high grade was coming from. So I continued to increase my investment as I got more and more confident they were vectoring in. And that culminated about a year and a half ago with the Ballywire discovery, which is now one of the most exciting discoveries. Bart, the CEO, talks about the highest grade silver and zinc discovery in Ireland made in the last 20 years. It's got about 1.6 kilometers of strike. So they've had consistent results of 10 to 50 meter widths of 15-20% zinc consistently across about 1.5 kilometers of strike. So it's now you got size, good grade, and now really good size. But the real kicker that's got everybody really intrigued and me really excited, Stein, is that below this silver, zinc, lead zone that you talked about, the Ballywire discovery, they're starting to see really high grades of copper and silver, like pure copper and silver, 6% copper, 500,000 gram per ton silver. There's a theory that we think we're starting to flesh out in great detail now that below this silver, zinc, lead zone is a pure copper silver target. So the silver, zinc, lead zone is about 300 meters deep, and at 600 meters, there's this juicy copper silver system that's feeding up these high grades, because these grades are exceptional and off the charts for Irish deposits, which are usually predominantly zinc, as you mentioned. But regionally, there's 4 or 5 pre-producing or past-producing copper mines with silver that have been produced that are on the same stratigraphy. So we think we've got a fully intact silver zinc system and a fully intact copper silver system below. So you're getting a 2-for-1 special. And both of these discoveries are shallower depths than the 50 million tons that Glencore has, which is at 800 meters. So you got all the right attributes of mineability, grade, scale, infrastructure. It's still not a very well-known story. We just did our first kind of institutional financing last quarter, about $5 million. The company's very well financed. It's got about $8 million in cash right now. And with those drill costs, you can do about 25,000 to 30,000 meters with the money you have in the bank. And these are shallow holes, kind of 300 meter to 600 meter holes. So we're just ramping up the exploration. It's that exciting time of fleshing out this discovery. But whatever we find here, I think has a very good chance of being economic. And Bart, the CEO, extremely hardworking, shareholder focused, good board. So it's got all I joined the board a year and a half ago as well, because I saw the story really becoming ready for prime time. And that's why I'm very excited to bring Europe along on the road with me as well.
Awesome. Thank you for outlining that. Another one, NorthIsle Copper and Gold. You seem to own about 5% of that story. Seems to be an attractive PEA in place already. What is the long-term vision on taking this project forward?
Yeah, you're seeing some parallels here. So very similar story to Group 11. I made my investment about 5 years ago. They had a large copper porphyry, your classic, 30-year mine life, $2 billion of CapEx, 0.3 to 0.4% copper grade. So when I made my investment, copper was $3. I said, look, if this copper goes to $5, $6, this project will be economic. It was a call option on a large project of scale in a good jurisdiction with great infrastructure. But the same thing I said about Group 11 is true about NorthIsle, and it's happening in real time right now. I said if they could find the geological potential of the district was phenomenal. They have a 35 kilometer district. So if they could find some high grade to improve the economics of this project, find the first 5-10 years of mine life that could pay off all the capital for the 35-year larger project, that would take the call optionality needing $5 copper to push it down to you could build this project right now. And lo and behold, Sam Lee and the team done a fantastic job. They made a major discovery called Northwest Expo 2-3 years ago, which is about, at the time, it's growing now, about 1 million ounces or more of 1 gram plus gold at surface with almost no strip. So you're taking out a 35-year copper porphyry project and laying on a very profitable gold mine at the front end. What that does is it lowers your capital. So you now have a very profitable, smaller capital gold mine funding a very large 30-year copper project. And so that's why the stock has really taken off here, because the economics of this project, as you mentioned, are just phenomenal. It's one of the best looking IRRs, best looking PEAs that I've seen in a long time. And the really exciting part is potentially we're just getting started. Like Sam talks about a 30-year starter pit, Sam Lee, the CEO, because he believes that the deeper roots of the system have yet to be discovered. So that's how you go from call option on copper to, wow, we've got to build this mine right now because the gold and copper combination makes it extremely valuable, to I found a philo, BHP type deposit underneath here. Now the company is extremely well financed, advancing through permitting. The Canadian government, and BC in particular, has gotten very, very serious about accelerating timelines for critical metals projects. And this is a part of Vancouver where there was a past producing mine called the Island Copper Gold Mine. So there's a port there, there's roads, there's an airport, there's actually a wind farm very close to the site. So everything you would need to build a mine is already in place. That saves you billions of dollars of infrastructure that you'd otherwise have to put in. And so this project is being fast-tracked through the permitting process and is being fast-tracked with the success they're having with the drill bit and driving this project economics even further in the future. So yeah, there's a great example of having that vision. Sam Lee's had a great vision from day one, communicating what he felt the project potential has, and the project only gotten better and better every single year as he continued to roll out success and de-risk the project with an A+ team and the geology that he used to give benefits to shareholders.
Sounds like a lot of optionality right there. Very interesting. Northern Superior Resources, you seem to own about 12.2% of that company. Can you also shortly outline really what that asset is all about and what your long-term vision for that company is?
Yeah, another similar attribute, Stein, 30% ownership, or 25-30% owned by management insiders. So again, another one that thinks like owners. This is one where a combination of geology and smart M&A and strategic vision has led to, I think, a very, very exciting story. So Northern Superior had a couple of assets in Quebec in the Chapet-Chibougamau camp about 5-6 years ago. While we owned these assets, a company called Vanstar made a discovery of Nelligan deposit, which was subsequently sold to IM Gold. But that deposit now has 8 million ounces of gold. Northern Superior owned a couple of properties adjacent to that asset. And we saw very early on, 4 or 5 years ago, that this was a camp that had tier 1 potential, like a Detour, Agnico's Detour mine, million ounce plus potential. And so we said, if you're going to have the scale to build a mine, there's a lot of deposits in the camp that were owned by 5 or 6 different juniors. So junior ABC owned 1 million ounces, junior B owned 600,000 ounces. We owned about 500,000 ounces. And we said, if there is going to have the scale to be a camp here, you want to consolidate the district. Because at the end of the day, if there's 15, 20 million ounces in a camp, but it's owned by 8 different companies, that's going to be a major roadblock to advancing that project to a commercial decision. And so over the course of the last 3-4 years, at Northern Superior, with my partner Simon Matcutt, the CEO, took a very aggressive strategy to consolidate the camp. So now today, those 5-6 companies are all gone. Northern Superior has acquired them, basically all of them. IM Gold acquired Vanstar. So today, there's 2 companies that control effectively 12 million ounces. Northern Superior has about 4 million ounces. IM Gold has about 8 million ounces. There's already 12 million ounces identified on the board. And the exciting thing, Stein, is that everywhere we drill, including IM Gold and ourselves, we continue to expand the footprint of gold mineralization. So the idea of a 15 to 20 million ounce camp is not at all out of the question. And IM Gold has said that in their public conference call. So we own 70,000 hectares. We're the most dominant landholder in a camp that we think is going to become one of the premier gold camps in North America, in the world, if not the world. And we're still trading at an extremely low valuation vis-a-vis other camps. You look about Finland or Guyana, some of these areas that become known for mining camp potential, you often trade at $150 to $200 an ounce in the ground. Even despite the move that North Superior stock has had the last kind of 6 months, we're still trading around $40 to $50 an ounce in the ground today. So we think we've got A+ real estate. We're in the perfect zip code where a very large mine can be built, and we've consolidated the majority of the deposits in and around Nelligan. And so at some point in time, this project will get developed, and we would probably hold the keys to a potential development scenario. As a junior, it's a very exciting place to be.
Definitely. Thanks for outlining that, Michael. Last but not least, Radisson Mining Resources, another interesting PEA out there. It seems to be a trend of an IRR close to 50%, 50. Can you tell us really what your vision is on this story and where you think this company could take you?
So back to my tenants, management ownership. I mean, the board owns 10% plus of the company. So again, we think like owners. This is a project that I got really attracted to the grade. So on my list of things I look for, Stein, and when I first made my investment, it only had 450,000 ounces of resource, which is relatively small, but the grade really caught my eye. It was around 9-10 grams. And what also caught my eye is that it's in an area that had a past producing mine, the O'Brien mine, that had the highest grade gold production history of Quebec, 15 gram per ton head grade. So you've got a high grade resource adjacent to the highest grade gold mine in Quebec. So that caught my attention. But the knock against the project were always two things. One is it's not big enough, so that those ounces are nice, but you got to be bigger if you want to talk about being a mine. And second of all, there were some questions on metallurgy. Was your refractory, or what are the recoveries going to be? The project's been advancing slowly but surely. A couple of years ago, we got to about 1 million ounces of gold. So that was the first major milestone. We said, okay, now we're sniffing at that scale potential to become a mine one day. And then about a year ago, maybe a little bit more than a year ago, Matt Manson came on as CEO. Matt has built several mines in his career, including Marathon, Valentine's mine, which is now owned by Equinox, and got owned a couple of times. So Matt's built a bunch of mines in his career, and then Pierre Baudouin, our chairman, has also built multiple mines in his career, including Detour, which is Agnico's biggest mine, and most recently Silvercrest La Chispas mine. And then we recently added Peter MacPhail, who was the former CEO of Alamos, who has built multiple mines in his career and a very successful track record. So on our team, we've got 3 guys between them have built 9 mines in their career. So you don't typically see that, Stein, at a $200 million market cap junior mining company. It's rare you have even one of those guys on your board or in your management team. The fact that we have 3 speaks to what these very experienced mine builders see, which is we do really believe that we've got a mine under our feet now. Now, the really exciting part of the story is we got to 1 million ounces at 10 grams. We drilled a hole 1,500 meters deep. So the current resource is about 80% above 750 meters. So that 1 million ounces is mainly between 750 meters and surface. We drilled a hole 1,500 meters deep below the old 15 gram mine, and we hit 80 or 90 grams over 4 meters. So we hit one of the best hits we've had in the project's history. But what's really important is where's that hole? It's about more than 2 times deeper than the known boundaries of our resource. And now we've continued to drill at that depth. I think we've hit 11 or 12 holes into our project. All 12 holes have hit visible gold underneath that mine. So we're showing that the market that, we've got 1 million ounces between 750 and surface. But if we're drilling 12, 13 holes to 1,500 meters deep and hitting every single hole is hitting gold, this system has potential to double or triple in vertical extent. And that's why we're talking now about a 3 to 5 million ounce system at Radisson, which really has screams of mine building potential. The last piece of the puzzle that attracted me, again, back to infrastructure again, something I look for. There are 6 mills within 75 kilometers of our project. It's a prolific mining camp in BTB, Rouyn-Noranda, Quebec. There's tons of mills in the camp. Most of those mills are not fully stocked, so they have excess milling capacity, so they're hungry for more feed. And we've got 1 million ounces plus now on the resource books, 3 million potential, 3 to 5 million potential upside, but our grades are exceptional, anywhere from 5 to 10 grams in our resource. So we've got high grade feed, we've got a lot of feed, and you've got hungry mills in the camp. And what that means is it's highly unlikely that Radisson's going to have to build our own mill. So when you look at our PEA, we did say, look, it doesn't make sense from an economic perspective to build a brand new mill when you literally have 2 mills within 30 kilometers of your operation. So we did a toll mining scenario where we said, okay, we're going to build the mine, we're going to use someone else's mill, and that's why the economics, at current gold prices, $3,600 an ounce, it's probably got about 100% IR. The payback at $3,000 gold was one year. So the economics to build this project are compelling. It's getting bigger and bigger by the day, and you've got a lot of infrastructure in the camp that would be desiring high-grade feed. So again, just trying to find projects that, again, no guarantees, we're still a PEA stage project, but trying to find projects that have a higher than likelihood chance of becoming a mine. And what's been so beautiful and frustrating at the same time about this bear market side is I've been able to buy these projects at pennies on the dollar, de-risked projects, and there's still incredible value in these names. I don't think that's going to last for a long time. The producers are making too much money. They're spewing cash flow. Their stock prices are up. So either the retail market or the stock market's going to push these prices up, or the producers will start to step in and do more M&A, and we're seeing more M&A. We saw Tech and Anglo this week. You're going to see more large M&A, but you're also going to see producers, I think, getting more aggressive about backfilling the most logical acquisitions in their own backyards of these companies that are still trading at very low valuations.
Thank you, Michael, for really taking us along in that picture. It's interesting to see the trend across these 6 different companies that we've talked about. Of course, you have a larger portfolio that we haven't touched upon just yet, but all of them have the potential to become a mine. Either they're high grade or they have the potential to become very large. Really interesting to hear those insights.
Well, thank you. It's a work of passion and love that I have for the sector. It's not been easy the last 5-6 years, but these high quality projects is what keep you excited when the market's not doing as well. You gotta. That's the thing. You can't substitute belief, right? When you have a good project, it's a matter of time before the market takes notice. And it's good. All you have to do is kind of shepherd it in a way that maintains the value for the shareholders in the downturn.
Awesome. Perhaps you can quickly outline again about your European tour, how people can potentially reach out and participate in that, actually swing by and visit.
Yeah, so the tour is being hosted by Amvest. It's a group that brings a lot of companies through Europe. Hopefully you can put a link to sign up in the show notes if that's okay with you. But the best way is to send it. It's invitation only, but you can register on the site, and then you'll get a call back from the organizers to officially register for you the event. All 6 companies I talked about will have their CEOs present on this tour. So if you want to learn more about these companies, get to meet the management team, get to know a bit more of my process of how I've allocated capital and how I take a portfolio approach to investing, it'd be a great place to meet face to face. Like I said, we'll be in those 5 cities over 5 days, and unmatched access to, I think, a basket of really high quality companies in one location, a really effective use of investors' time to see 6 high quality companies in a 2-hour span. That's the idea, providing value to those who come to see us. And so, yeah, love to see you there, and hope to see many of your viewers at the conference.
Perfect. Link will be in the description. Thank you so much for your time today, Michael. Really appreciate it.